The diamond top pattern, which we identified on yesterday's show, has begun to break down, as you can see over here on the chart, but the target has not yet been met. With the recent Binance FUD, is it going to be enough to get our final price target over here of 25,258? Well, stay tuned for the rest of the show because we have a whole lot to cover. And if you have a look at the crypto bubbles chart over here, there is one coin that stands out above them all. And this is another one that we've identified on the show months back. It's Casper with plus 20.4% on the day, which is pretty impressive considering the sell-off. And then most of the charts are still red. BNB only minus 5%. I would have thought it would be harder hit with all the Binance FUD. So if you like the content from these shows, make sure that you give the like button a tick over there, and then subscribe to the channel and hit the bell notification as well. It does help us to get everything out there. And let's get straight into the show. So in the past week, what has crypto faced? Well, Coinbase was hit with a Wells notice. The SEC basically sued Justin Sun. Do Kwon was arrested. SushiSwap was subpoenaed by the SEC. And then you had the Commodity Futures Trading Commission, which recently just came out and filed a lawsuit against Binance and CZ. And then basically here, 𝗕𝗆𝗄𝗧 says that it seems like a coordinated attack. So that Operation Choke Point continues in full force. We've been outlining this for a long time. I think if you do live in the US, honestly, the best thing that you can do right now is make sure that you are using a VPN so that you're not brought into this whole thing. I'm not here to plug a sponsor. I'm actually not even sponsored by NordVPN, but there is a link in the description below, which does get you a sign-up bonus if you don't already have one. So moving on over here, if you have a look at this, what is the TLDR? It's quite a difficult one because I think that this was something like 75-page document that the CFTC allegedly gave them. So basically, if you have a look over here, they claim that it's an unregistered derivatives platform or broker. They knowingly offered products to ineligible US citizens. Obviously, those ineligible US citizens were most of them probably using VPNs, knowingly allowed crime or terrorism proceeds, and then calling them the cartel. So more than likely coming from the DOJ is according to Collins Bolton over here. And if you look, this guy never misses. This guy never misses. So have a look over here. He's the same one that interviewed Sam Bankman, and we know what happened with him afterwards. So
not about making money. In fact, CZ doesn't care about money. Look at his clothes. Priceless.
He has no fancy clothes or cars, and he plans to donate his wealth to charity.
Not about making money. In fact,
so there you have it, and he never misses, as you can see over here. Straight after he was with SBF, then the CFTC charged Sam, and now he just finished a show with CZ, and they charges Binance and CZ, of course. So absolutely crazy times. And if you know CZ, you'll know that he posted this early in 2023 because the poor guy does get attacked left, right, and center with FUD on an ongoing basis. So he says, I'll try to keep 2023 very simple, spend less time on less things, the do's and don'ts. Now, if he shows the number one, it's education. Number two, compliance. Number three, it's product and service. And if he shows the number four, then it's ignore FUD, fake news, attacks, etc. So basically suggesting that he doesn't want to have to explain himself every single time. If he shows the number four, then that's essentially what he's saying. It's FUD. So he doesn't believe this. Let me know in the comments, what do you think? Also, let me know in the comments, are you present today? Let's do a quick roll call. Are you present? Are you here? Thank you for coming in daily. I do appreciate it. I hope to bring you the highest level of alpha that I can. And so far, we continue to nail the market. And it's not just me. It's obviously a team of phenomenal people that I'm surrounded by, as well as an encouraging community. You guys help to get the calls right, as well help to gauge the sentiment. So if you have a look over here, like what is basically CZ saying? I've summarized everything. So this was his statement that he gave in response to the complaint. And in essence, he's basically been hit by a civil complaint. He disputes the complaint and claims to have the best in-class compliance technology in the world, high standards of KYC and AML, which basically is that know your customer. So saying that he does due diligence on the clients to avoid any sort of fraudulent activity. And he has a commitment to transparency and cooperation with regulators. The company holds numerous licenses and registrations, the most in the world, he says, and denies trading for profit or manipulating the market. And he basically is always looking for solutions which will help in collaboration with regulators globally. That's what he said. But then something interesting over here, he says he eats dog food. Now, just hear me out, guys. He says, I highlighted it there. Personally, I have 2 accounts at Binance. One for Binance card, one for my crypto holdings. I eat our own dog food and store my own crypto on Binance.com. So obviously, I know a lot of people don't understand what this means, but it's actually a term which I just find a very strange term, eating your own dog food. Here's the definition. Dog fooding is the practice of using one's own product or services. This can be a way for an organization to test its products in real-world usage using product management techniques. So hence the food, the word is the food, hence the word dog fooding. It can act as quality control. So that's where we add in the whole Binance situation. Look, we need to give it a little bit of time to see how this unfolds. But in the grand scheme of things, I do believe that the market is still in a transitionary phase. And I'll continue to say what I've said so many times before, that the magnitude of each sell-off becomes less and less despite the increase in bad news. And that's showing you that there's a transitionary market taking place. And I'm not necessarily looking for new lows, although I'm always prepared for either situation. I'm equally prepared for 10K as what I am for $100,000 Bitcoin. And you should be too. That is how you really take advantage of the markets, is by having great risk control and being ready for any situation. So some people may have concerns around now Binance withdrawals, around on the exchanges because of all of this. And if you look over here, the withdrawals surge following a lawsuit by the Commodities Futures Trading Commission. Nansen data indicates that Binance is holding $63.7 billion in crypto. And definitely there were some outflows following this. If you look over here from Glassnode, it's basically showing that they have 35 billion in actual liquid assets, and basically, if you look at the breakdown of that 420,000 Bitcoin, so it's $11.5 billion they're holding in Bitcoin. That's their proof of reserve. Show that stable coins is 10 billion, and then ETH is roughly 8 billion. So they haven't been too hard hit yet. There is slowly but surely people are starting to withdraw as the news breaks because of fear of that. But I think Binance were somewhat battle tested towards the end of last year when everybody was exchanging or withdrawing from exchanges. Then they managed to show that they have the funds and they didn't go down. So let's see. I don't really have too much to comment on the situation. I always say though, with Binance as well as with any other exchange, of course, control your risk, guys. Like, you don't want to have your entire net worth on an exchange. I would say just use what you need on the exchange to make the trades. And if you know you're holding them for long periods of time, and it's like a hodl position or a long-term investment position, and you don't need more than, let's say, a couple of hours to get the money back onto an exchange to sell in the event of an emergency. So let's say you're trading the daily chart or above, then that would be you. Then you can just take the coins off of exchange, put it onto a hardware wallet, onto a ledger, put it onto MetaMask, anything, but you don't need to keep it on an actual exchange where it's at risk. Okay, let's look at the price action over here. So what do I see this as now, this pullback that's taking place? Well, currently you can see we did hit the middle Bollinger Band, the middle band of the Gaussian channel, and it's rejecting off of that. So we're coming down. Once you start to see a weekly candle close below the previous week's candle, you can expect that there's going to be acceleration towards the downside. Now, the downside areas of interest, you can see the lower band over here is coming in currently at $22,395. And then you have both EMAs. The EMAs that I'm running over here, you can have a look, is the 9 and the 18. So I have the 9 white and the 18 is the yellow. That is an area of interest. If price comes into here, that's kind of where I'd be looking to reload my positions. Remember, I did take profit. We did outline yesterday the diamond top pattern, which we're expecting a breakdown, and therefore we took our profits from that zone over there. And now you're looking for any throwback into this region as just an area where you can get long again. You can add to your spot positions. If you start to close below that band, things get scary very, very quick, and then these lows are at risk. I personally believe these lows will hold. This looks like a major reversal candle coming from an important area, and so far so good. I would treat this more as just a simple pullback. So if you look at what TED Talks Macro says over here, we won't go through the whole thing because it's very long, but I think there's a few important parts. So he says, just like every other Bitcoin cycle, the current one has its nuances. However, I think that we're currently trading in an environment akin to September to November of 2019. So what does that look like? That looks like this. If you look over here, he's comparing us to this area from around 2019 in that area, September. Obviously, COVID happened. Had COVID not happened, then I think price would have just continued into a new bull run. And the reason why is this. These are things I've outlined to you guys as well. Then he says over here, the Fed in 2019, they cut rates by they cut rates 3 times by October. They began expanding the balance sheet in September. The Fed in 2023 basically began expanding the balance sheet now in March. And there's 100 basis points worth of rate cuts that are priced in come the end of the year. Bitcoin in 2019, the price bottoms after moving 83% lower from the all-time highs and 500 days before the 2020 halving. Okay, look at now. Price bottomed at 78%, so 78% lower than the all-time high and 500 days prior to the 2024 halving. So all the things are consistent, he says, between the cycles, and basically you are looking for things to play out somewhat similar. So let me know in the comments, what do you think? Is this enough for you to go long off of? I think it has a place to form part of your thesis, but ultimately you want the trend to remain up, right? As long as there's an uptrend, then it's okay to be long. That's my theory. I think I would be more comfortable to be long in an uptrend. If this is something that I'm looking at and we're holding a downtrend, then I think the trend rules all, and ultimately I'd rather be out of the market. So what are the other charts saying over here? The 4-day chart. Yesterday we outlined that we're starting to lose that short time moving average, the yellow one over here, the low time frame moving average. And if we lost that, we're going to be moving all the way back down towards the green moving average at 24,863. So that's another area where you could potentially buy the dip. Let me just get this cursor thing for you. There we go. That should be easier. So this should be another area where we're looking to buy the dip. It all has confluence. This would be the first area to load up on. If you started to lose that, then these are where your final buys get set in place, which is what I just showed you on this chart over here. It lines up with this region, right? So we'll narrow it down onto lower and lower time frames. Now, the dollar is continuing to contract down, so it's still stuck within an interesting area. I still think that it could bounce from this zone over here and recapture the yearly high, which would continue to add that downward pressure. This is something that we identified already all the way back on Thursday last week when we reacted off of that 102.1 area. So that wick that showed us that it looked like it was going to reverse. The stock market, I'm not even going to show you. It's kind of in the middle of no man's land. Nothing interesting has happened over there, so we can kind of forget it. Let's look at how 𝗬𝗍𝗃 is doing. So we have our long-term trend line, touch point, and then again another touch point coming in over here. Yesterday it looked like we were really going to break this down, and once you break that down, you would then be looking to target down towards the low region. Now, it was always of my opinion, because a lot of people have asked me on Twitter, what do I think about Altseason? Is there going to be Altseason? I think that's possible. I think that Bitcoin needs to finish the sell-off first, wherever that sell-off ends. I think that once that sell-off ends, there's a possibility that so altcoins are going to get hit harder, right? So let's say Bitcoin continues to sell off and altcoins go all the way down. I think that when Bitcoin sets its next major bottom, wherever that may be, altcoins will probably bounce much more aggressively than Bitcoin. We're definitely getting to that point in time now where people are losing complete faith in altcoins. And you know how the saying goes, right? Once everybody capitulates on something, let's say altcoins, then usually that's what leads to the next move up. So far, this is not convincing enough for me on the 𝗬𝗍𝗃 chart to suggest that it's going to have a major bounce. Remember, you get two types of support, right? You get primary support, which is your main strong level of support, For me personally, those are horizontal levels. And then you get secondary support, which is not as strong, and that's more temporary. Secondary is also like a temporary support. And for me, that would be this trend line. So yes, it is support, but it's not major support. I would expect that if Bitcoin continues to sell off, I think altcoins will be hit harder, and the ETH BTC chart will most likely continue to distribute all the way back down. I showed it yesterday. I think that gives you about another 20% worse sell-off against Bitcoin. So 20% against Bitcoin, and then plus the dollar pairings will go down even further. So that's what I think over there. Here's the other one that everyone's been heated about is Arbitrum. So all excited. We identified we want 50% drawdown from the local top. That was where we'd have a level of interest to start to enter the market. Downward trend line, which seems to be holding. Any push that comes up into this zone over here would technically be a shorting opportunity for me. So if you see Arbitrum bounce into here, you could short it still for another 38% to the downside. And this is the minimum criteria, 50% drawdown from the local top. So far, we've done how much? Let's quickly grab the ruler. So far, from the exact top to current price action is 26% down. Yes, minimum criteria in crypto 50%. These things can go 70 to 80% down. Total 3 on the 3-day chart over here. Very simple, lower high, lower high, lower high. Continuing to show signs of weakness. We identified that yesterday. Much more weakness than what we saw the last time we were at range highs. Last time we were at range highs, we almost started to close outside of that. Look at this. Now you have selling pressure. Look at the wicks. You can tell by the candlesticks, right? Look at the wicks. As soon as you get even close to this region, big players are offloading their altcoins and even short selling them. So it doesn't look ripe already yet. I might start to get interested again if it gets all the way back down to range lows. Let's see percentage wise. That is in line with the ETH BTC chart, right? ETH BTC chart showing 20% down to the next major support. Total 3 is also showing another 18% down to next major support. So exactly in line with what we're seeing on the ETH BTC chart. Now, one thing that you can do, at least while it's still Bitcoin season and it's still Bitcoin's time to shine, I think that it's better to play Bitcoin. And one way that you can do that is if you are looking to set orders, then we're looking at this area to potentially become the new range. This is what we identified on yesterday's show, right? We're hoping that this area will flip into support, and then over the coming months, this could potentially be the new range. So your first buy zone would technically be exactly what was the previous resistance. This was the previous resistance. You want an SR flip. So resistance, resistance into support. You want that to be support. Therefore, if price continues to come down, this could be the opportunity for those of you who did miss out to potentially get some of your orders in within that zone. If that zone gets lost, then remember your next zone that you're looking to is the 200 EMA, which is the white chart over here. That's coming in at $22,000. Now, that's also in line with the other chart that I showed you on the weekly chart. So that's your final zone, because you want price to now set in its next higher low. So you came off the 200 MA, higher high. You want a higher low, where that happens there or where that happens there. That means this area is, to me, a buying opportunity for long-term spot. So what I sold up here, I'll be looking to re-add some over here. And if it gets here, most of it over there. So one way that you can do this to make it easy for you, because you know these things happen fast, right? Sometimes you might have a quick wick down, it immediately reclaims, and then it's over. Like, it happens super, super quick. So what you can do is, I haven't shown the strategy for quite a long time, but Bitget offer a grid trading strategy. I don't think they're the only exchange. Your other exchanges might offer that too. You'll just have to have a look over there. But if you go into Bitget and you go onto the futures grid or the spot grid, you can set up your orders. So my recommendation is to spread your capital across those areas. What I would do is I would maybe wait for the futures grid, which means you're going to be leverage trading with a grid strategy. So how does that look? Leave that for the lower regions, because your risk to reward is much better, right? If price does get down to that 22.5 to 23K level, this is where I would be using the futures grid. The rest, I would rather use spot just because you want to eliminate risk. So for those who may be new and are unfamiliar with the way this works, because there are a lot of new market participants, guys, so be patient. I know a lot of you have been loyal. You've been here the whole time. But for those of you who are new, and I know there's a lot of you, this is essentially how the grid strategy works, right? So what it would do is it would take an area. So you'll place your bid. You'll say, hey, I want price to start buying from 24,000 and I want to scatter my orders down to 22,000. And you can set how many grids you want. Do you want 10 grids? Then it's going to split that order, $1,000 or whatever it is that you want to put in, 10 times between that category. So leverage would be good for this zone. That therefore, if price comes in, it will quickly grab those orders, and then hopefully from an important support area. Remember, we buy support, sell resistance. So from an important support area, you can see price bounce out of that zone. So how do you do that on the chart over here? Well, if you're using the futures one, you want to switch from the, okay, let's click that off. So you want to be obviously on the long strategy, and you don't want to go onto the AI strategy. This is the you can use this if you want, but I recommend you just go to manual creation, and then you'll set the lowest price. Okay, so the lowest price that I want price to buy at is $22,000. The highest price I wanted to buy at is 23,500. How many grids do I want? I want 10 grids. And then how much leverage do you want? 3x, keep it low, in my opinion. And then how much money do you want to put in? Then select your USDT amount, and then you say create the order. So that's for the futures grid. For the spot trading, I think that you can start to buy from a little bit higher, just because it's not going to be as risky, right? So again, same thing, grid strategy, spot grid over there, move it on to manual creation, lowest price still the same thing. I would say 22,000 or 21,500. That's where it starts to get very scary. You probably don't want to you don't want to be buying underneath that. You start to lose those levels and things will get bad very, very quick. And then probably from even about, I want to say 26, but let's keep it exact with the chart. This is ultimately your support zone. So let's say 25.5. Then you're looking at 21,500 to 25,500. Number of grids. Choose the number that you want. You can go up to 90 grids. So feel free. It really comes down to your own preferences. I'll just say 16 over there. And basically, it will enter the amount. You select the amount over there, $10,000, $100,000, whatever it is that you have, and you click create order. If you do want this strategy, then there is a link in the description below which takes you to Bitget. They give you an $8,000 sign-up bonus. It helps me if you use the link. So full disclosure, it does help me. You don't lose anything. You would have to pay exchange fees either way. By using my link, the exchange gives me a small kickback off of that. So use that link over there if you do want to. Okay, moving on. Let's go on to the other daily chart that we have over here. So the RSI has now started to cross to the downside, right? We have here the RSI will cross back up if price gets back above $27,900. Where's price right now? It's 27,000. So currently it's pressure towards the downside on the daily chart. And you want to see how price reacts. So if you are taking high leverage trades, don't go mega long or giga long over here when it gets to this area. Wait to see on a low time frame how it reacts. If it starts to show signs that it's bouncing, if it starts to print nice wicks over here and the bodies are closing above the support area, then it's showing a beautiful reversal candle. That would be an indication that maybe now it's time to start to consider to take a leverage long, and then you put your stop underneath that wick and you have a beautiful invalidation. So for the time being, I'm looking still, same thing, 25,500-ish as the area where price might start to bounce through. We had this area which they call the fair value gap. So it's basically an inefficiency from the candle, and that's why I've taken it from this region. It also happens to line up with the 34 EMA, which is constantly tracking back up. So let's see how that plays out. If we get a reaction off here, I'll let you know both on Twitter as well as if I happen to be live at that time, if I'm taking any bids. At the moment, I'm pretty much fully in cash. What positions do I have? I am fully in cash other than this. This is the only other positions that I have. is on OKX. Remember the aggressive bots that I was running? I closed those positions out. I was doing aggressive buys on altcoins because I was looking for altcoins to rally harder beforehand. I sold those at about a 25% profit, and I let you guys know well in advance. These ones is a 1-year portfolio on both, ones on crypto gaming and ones on other coins, which are like layer ones and dexes and things like that. You can see the list over there. So here's the other one. So these I leave constantly running, right? I buy $10 a day on that one, $150 on this one, and $100 a day in Bitcoin. And here is the P&L that currently stands. So you can see layer ones have been absolutely crushed. When you even have your crypto gaming up 20%, and I ran these at the same time, but you have layer ones at -11. It's like, which one really is the blue chip safe play over here? Is it the gaming coins or is it the layer ones? Makes you wonder, right? All right, targets. So very simply put, if you want to keep a nice clean chart, pretty much just running from the ultimate lows to the wick that we had over there, that would be target 2 coming in at that 21.5. This is the rationale and the reasoning, just extra confluence for you with what I've shown you on the grid strategy. And target 1 would be that you retest the top region over here as support. So you can see wick, come back into this zone, fair value gap, target 1, 25,000, target 2, $21,500 to $22,000 region. Okay, let's see how this pans out. Next, the 4-hour chart. Okay, kind of forming a range. You can see the momentum oscillators have come down. There might be a little bit of a bounce, but I do believe that these bounces could potentially be short-lived. And the reason why is because we showed the range, right? We showed the range, and then we had the diamond pattern formation over here, or triangle, whatever it is you want to call it. We got the breakdown from that, came back down into the range low. Now we've started to lose the 50 exponential moving average, which is the red one. Your next area of interest, again, lines up, confluence with everything else that we've looked at. The 200 EMA is busy rising. It comes in line with that range high on the daily at 25,200. Now, what I want to say about this is if you do see price come down here, you really want it to react quickly. If you start to hang around this region, it's going to be even more bearish, and then you have to look to those low targets, to what I labeled as target 2. In the short term, though, so over the next couple of hours to days, you're kind of watching this region over here. So first, we had a simple uptrend. We identified down, break of structure, right? That was a break of structure. Equal highs. So now it's a risky situation. Consider taking profits. The only case that we had for higher was to take out the shorts. The short stops were over here. So came down, messing around a bit, consolidating, breaks below the mid-range. This is the mid-range over here. And again, another break of structure. So lower high and lower low. Now you want to see what's going to happen over here. My anticipation is we're probably going to consolidate within this region, probably going to set another lower high into the mid-range, 27,700. That would be an area to short from. If you short from that region, you're going to place your stop loss. Okay, I see I have the magnet on. That's why it's looking all laggy. You're going to put your stop loss over there. I'll use the risk to reward tool now to show you. I am currently running a short trade. Remember, yesterday I gave you 2 trades. I gave you 1 short trade and 1 long trade. I said because you're in the apex of a triangle. Where's the apex of a triangle? You're right over here. It's very, very easy to manage your risk. And therefore, that's the one instance that I would take a trade in both directions. The long stopped out and the short is busy printing. It's in profit. So you could compound your short and re-add if it comes up into this region. I do think at a later stage it rolls over, and then you take out these long stops which are building up. So what would that look like? It would look like this. Short position. If you see it come back up over here, there you go. Kind of putting your, this is quite a tight stop. If you wanted to be really aggressive, you'd go up there. I don't want to do that. I'm already in the short, so I would just look to compound stops above these regions over here and shorting down to the next EMA, the 200 EMA on the 4-hour chart, which is also range high support. What was previous resistance, and now we're looking to retest that as support. So that's the short setup, right? You're looking at that. Entry 27,760-ish. Stop 28,371. Take profit 25,256. So it's written here, right? red one over here is your stop. Then you have your entry as the gray. And then you have your green one as your take profit. So you can see it on the chart there nicely. Okay, next. If you do look at leverage though, leverage is pretty healthy. I agree with this from CoinEye. You can see in the grand scheme of things, the leverage is healthy. So this is the entire market cap of crypto, or the entire cycle of crypto from the previous bear market all the way into the bull runs and back down. You can see that leverage has, the open interest has basically fallen off a cliff. That's showing that the market is potentially still resetting. And this is in agreement. If you look at CoinEye over here, you can see that the rallies that we've had have mostly been spot driven. This shows the spot traders. This is the leverage traders. They haven't participated as much. Leverage is continuing down. Open interest is continuing down. I think that's about it, guys. What else? I have a few more things to mention. Okay, firstly, go through over there. If you do want to participate in the OKX competition, remember you can win yourself a Tesla as well as a couple of other things. Tesla is the top prize. We have week 1, we're giving away iPhone. Week 2, MacBook Pro. Week 3, Manchester City Football Club tickets ×2. And then you got a 7-night holiday in the Maldives, week 5 and 6. Week 7 and 9 is the top prize, Tesla Model 3. You can take the reward in USDT if you're not interested in those prizes, as it shows over here. All you have to do is open an account, take a trade, and you're in. What's more important about all of this, it's less about winning, right? Let's be honest, your chances of winning are obviously not magnificently high considering everyone joining, but you have guaranteed access into the Discord. This is where we give the trades, right? Look at this. We give you all the trade setups. We give everything over here. P&Ls. I can't promise that you're always going to get this 7,272% P&L. This is the biggest percentage trade I've ever taken by far. So I thought I would just claim a little bit of clout. Make sure you give me a bit of clout. Write in the comment section, clout. And then also give the video a like. Smash the like button over there. And then that's it from me, guys. I think that's really it. Basically, price is essentially just going to continue to consolidate, I think, a little bit longer, and then watch for the bounces. If you start to form low highs, you probably want to look to short those down to the 25K support. Other than that, I don't have too much to add. Let's see what the day brings us. I hope you all have a fantastic day. I do appreciate each and every one of you. And that's it from me. Cheers for now.